Hey guys, Matt here. In this video, I'm going to give you guys an update on my net worth, and then I'm going to reveal my full investment strategy, not just for my Fidelity portfolio, but for all my investment accounts. So, if you guys aren't aware, if you have a Fidelity account, you have access to this network tracker right now. It's called Fidelity Full View, and all you have to do is go to Accounts and Trade, and then click on Full View. And voila, this is it. Now, I've already added my accounts, but once you get here, if you want to add all of your accounts, you just do that. You add your various bank accounts, your various investment accounts, credit cards, and all that stuff, and then it will calculate your full net worth. Now, the last time I did this video, I had just broken 100K. Now I'm sitting pretty at 113.8K, so not too bad, not too bad at all. So I wanted to get started by revealing all of my investment accounts. So right now, this is my emergency account with Ally Bank, and then this is my checking account. So the way I do this is a little different than the typical emergency account strategy. What I do is, so I have this is my emergency fund, like I said, but I also like to keep a minimum of $2,500 in my checking account. And how I do this is, these are my credit cards, also linked to Chase. This is my Amazon card. This is my regular card. I put all my month-to-month purchases on my credit card. I don't use my checking account for anything. And then at the end of the month, I pay the cards off in full. What I like to do is I like to keep a minimum $2,500 in here, so that basically, if I need money like right now, and I don't want to wait like a day or two to get money transferred from my Ally Bank account, it's there. So this is like an immediate emergency fund. So $2,500 there. Right now I'm a little over that at $3,600. Now moving on to my investment accounts. This is my Fidelity account. This is a ETF account that I have with Vanguard. When I first started investing back in 2019, I first started out with strictly ETFs, and I slowly moved towards actively picked stocks. And I have one ETF. I think it's the international ETF. I have one ETF, and that's just to keep the account open. I also have my Roth IRA. Now, I consider my Roth IRA, so I have a Roth IRA, and then I have my work retirement account. And so my retirement account is for retirement. My Roth IRA is for somewhat the same purpose, but it also acts as a savings account that I can withdraw money from. So this also acts as a, sort of an emergency fund, but maybe like a tertiary one. So in case I really get bad luck, so I can go through this, and then I have the contributions that I can withdraw from that. Now, as far as my Roth IRA, I devote $500 every month to this. I think the investment limit is $6,000 a year, so $500 a month, $6,000 a year. So nice and simple. Now, as far as my retirement fund goes, I put 4% of my paycheck every month. I get paid monthly, so I put 4% every month, and then my workplace also matches that. So it's not that different from many other corporate jobs. And then, of course, we have my Fidelity account, which we're going to get to in just a bit. I don't have any tax advantage accounts, don't have any loans, don't have any real estate, and I don't have any stock options as of right now. Now, there are two accounts that I don't have on here, and that's because I don't really consider it worth it. I do have a backup Robinhood account that I use just for testing purposes. Robinhood is not an account that I believe in. I don't recommend it to anyone. The only reason I have that is to test changes and stuff. I have one stock, and that was a stock that came with the account. I also have an account through Rebull, which I can't say I recommend or not recommend it. I don't really use it that much. I just use it for testing purposes, and I have one stock in there. And I think between the two of them, I have a total of maybe $20. So not really worth it, not really worth adding it, but I feel I should let you know. Now, as far as my income, because, I got to fund my accounts with income, right? I will say that I won't consider it privilege because I worked really hard to get here, because I worked 15 years to get to the job I have now, but I have a really good paying job. It's not like millionaire status a good paying job, but I am making about 100K a year. So I work as a network engineer, and it took me 15 years to get to where I am, so I'm not gonna consider that a privilege. I worked to get where I am. So that's the lowdown of all my other accounts. Now let's get into my Fidelity portfolio. So this right here is my Fidelity portfolio. I have a total account balance of $54,493.04, and I am finally up over 40%. It took a long time to get here. If you've been following my channel, you know that I have not hit 40% gains since before the pandemic. I am doing really, really well as far as my portfolio. Like even Jivo and Hyliion, and if you recall, several weeks ago, Hyliion was my worst position, down 20-30%. Now I'm up 6.2%. I am really happy about that. And then Jivo, like I've been waiting for this thing to drop, but this guy just keeps going up like a beast. And then ARK, my other conviction investment, is finally up 6.74%, and hopefully it just keeps going up from here. And then we got Revolve. This is my first 5x stock, so you know that 100% is 2x, 3, and then 200% is 3x, so 400% is 5x, and I just 5x my money with this stock, and this stock has no signs of slowing down. I'm very happy to be invested in this stock. Now, I'm not going to go over every position, but as far as my strategy goes, every month I put in $1,400 to this account, and that $1,400 goes into this money market right here. Now, in less bullish times, I would put $200 a week or $250 a week into a dividend stock, and that would, over time, increase my dividend income. I'm running into a problem. I guess I would consider a good problem to have, in which all my stocks are up, and so I don't really feel comfortable deploying my money into anything like this. The only stock I'm down is AT&T, and that's less than 1%. So right now, the money that goes in my account usually just sits here where I wait for a position to open. Now, I have been looking for more positions. Now, one thing you will find is that most of my positions, and this is something I'm trying to change, or have something to do with tech. And that's because my background is in tech, and tech is something that I know the best. That is something I'm looking into changing. I would like to start adding non-tech positions to my portfolio, but I also don't want to add too many positions to my portfolio. I am painfully aware of how many different stocks I got, and that is something I'm actively looking to change. Cloudera goes private later this year, so at some point during the end of this year, this will go away. This money will get liquidated, put into my account, and that's that. I know I say this every episode, but I'm also looking to get rid of Sony, and that's because I never got a chance to build up my position, and so having it sit here is just a waste of my time. So getting rid of this, and I'm looking for a new position. Now, in this fully update, I'm not going to go in depth into the positions myself, well, at least not right now. But I am looking at something different, like for example, Wynn Resorts, some of the the resort-based stocks. I looked into Wynn recently, like both from a PE. Here, 1 second. Take a look at these numbers here. PE ratio, 11.39%. That is fantastic. And if you look at the PEG ratio, that factors in growth. That is phenomenal. Like anything below 1 is pristine, and this is more than pristine. All these numbers look good except for maybe their price to book. Price to book takes the balance sheet into consideration. And their balance sheet is not the greatest right now. But what I'm thinking is, most of this is because of the pandemic, and we all know that. And this might be a good opportunity to buy into the bounce back. Now, I know Wynn Resorts is a popular stock that a lot of YouTubers go over. And I know if you're into Wynn right now, you're probably asking, Matt, why now? Why not 6 months from now? Well, sorry. I guess better late than never, right? But anyways, that is a stock I'm looking at. But back to my portfolio. So other than that, right now my strategy is to otherwise hold and just keep adding money to my cash position. So that way, if I do see some weakness in the market, if some of these positions drop drastically, like for example, FedEx recently put out some fantastic earnings, but the stock's down 3.63%. If the stock market is stupid enough to let this price drop, I will definitely be adding more positions to more shares to FedEx. I will definitely be adding that position. And to wrap things up, we got to talk about my crypto. And before I show you my Ledger Live portfolio, if you've been following crypto for the past month or past week or past few months, you know that it has not been doing well. Not really doing the best right now. It is down 37%. Yeah, Ethereum and Bitcoin and crypto in general is not having the best time. So this is my Ethereum. This is the only crypto I have right now. Now, it doesn't show you, and I don't have an easy way to show you, but I put $800 into this. So that's the money that I put into Ethereum as of right now. And you can see I'm not exactly doing the best. Not doing the best at all. But, I mean, my strategy going forward is I'm going to keep putting in money just a little bit each week. Now, I don't want to go too heavy into crypto. My strategy with this is to get this up to $1,000 invested and then to wait. And then wait and do nothing whatsoever unless Ethereum does something really drastic and drop to like maybe under $1,000, maybe $700, $800. At that point, I may add a little more heavily, but I don't want to make crypto any more than 2.5% of my total net worth. So yeah, that's my net worth and my full investment strategy. But anyways, take care, have a great day, and eat your vegetables.